Ladies and gentlemen, welcome back to my channel and to another video of price action trading. And before we get started, let's take a look at the daily chart. Alright, so here we are at the daily chart, and post-election volatility has slowed down a bit. Bar for the day is this doji looking bar. Nevertheless, the rally is still very bullish, so I wouldn't recommend any long-term shorting at this point. But let's take a look at the lower time frame. So here we are at the 2000 tick chart, and I want to draw your attention to this segment of price action. Because for some people, this may appear like a downtrend, but in reality, this is a form of a trading range. I want you to tilt your head to the right just a little bit. And now you can see that the prices are swinging up and down, just like in a trading range. I want you to pay attention to these lows, these two lows. Did you notice anything special about these two lows? Take a minute, look at these. Yes, they are very far away from EMA. Take a look at the right side of the chart, and just like I mentioned in my video about the EMA acts like a magnet and keeps pulling prices closer to it. Notice here how prices get below this slanted support. This trend line acts like a support. It's just a little bit slanted, a little bit tilted. This is right here is a failed breakout, and most breakouts of trading ranges fail. This is where your high probability longs will occur, below this dealing range. This is the dealing range in which the algorithms will work within. Now, I just want to press this a little bit up. Do not look for longs at these lows if you're a beginner trader. Unless you're a very experienced trader, do not pick lows or pick tops. It's only for very experienced traders. I don't want you to start looking at, picking tops or bottoms and then start losing your hard-earned money. This is not the way. So I just only mention these lows as an example of why these lows, there's a higher probability of the bounce off of them. But nevertheless, we are working lower. At this point, prices are starting reversing. I didn't have this trend line yet, and I didn't really know where the highs are. This is what I end up with at the end of the day. I think we had a major overshoot right here, and it is followed by the price action. This price action basically confirmed that my trend line is probably right. But this was a good trade because it is far away from EMA. Look how far away you are from EMA. You're far away from EMA here as well. Look how far away. The EMA will keep pulling prices together. Prices will not stay away from EMA for a long time, and this is the failed breakout. So this was your first good trade. You have to draw your short-term trend lines. They will keep you on the right side of the market. You have a break and a new high. If I had just a little bit better signal bar, you could argue for taking the short because it is off the trend line, and you have a break and a new high of this higher working correction. But I still wasn't really feeling it. And now we are kind of reversing from these lows, and we made a huge rally up. And this is why, if you're patient throughout all this mess, this is why patience is the name of the game as a trader. If you are just patient from the open to right here, you have a textbook entry according to our price action rules. You have a new high here, prices pull back, first entry, pull back, and a second entry long right here from the EMA in an uptrend. Of the EMA in an uptrend. So this is a textbook entry that a lot of traders can spot and see. And if you just wait for these high probability setups, you will do much better. And then we just spiked up through here, made a last bullish attempt. And I actually remember, take a look at this pattern. Notice how this is very steep, almost 90-degree angle. And this is kind of the last bullish attempt. And I actually remember talking about this in my previous video. I'm just gonna find the day. This is how you will see that the price action keeps repeating, because I remember it vividly talking about this. This right here, we have the same pattern, very similar. Look how we are rallying up higher. You have a two-legged pullback. It's not yet to the EMA, and you have this last bullish attempt by the bulls to rally up market higher. This is almost 90 degrees angle, and look what happened from this point. Prices went into a downtrend unless you have a correction and a new low. And if you fast forward to today's market, it's the very similar pattern. We are working higher, very steep, almost 90 degrees angle. This is the last bullish attempt, and prices then continue lower until you have a break and a new low. So this is why drawing these trend lines is very important, and this is why you will get an edge as a price action trader over any other trader who is not trading this way. A lot of people are using, you know, some weird strategies on YouTube that I saw. You know, do not pay attention to them. Do not pay attention to them. Learn to read this market. Take a look how we bounced. We got rejected at these highs. I found this resistance from this point, but when you take a look at back into previous days, you can see that this was a major resistance previous days. If you just drag it up a little bit higher, and you can see on a daily chart, it actually is creating multiple tops. If you look at the daily chart, you can see that we got a triple top right here. But you know, my gut keeps telling me that this market is gonna go higher. Definitely we can see some shorter term bounce, which is all we care about as a price action trader, day traders. We only care about the shorter term bounces. So once this last attempt by the bulls got rejected hard, the next trade I saw was this second entry pullback to the trend line below the EMA. And I was thinking, this is an overshoot, and when this is an overshoot, you will most likely get a break over trend line. So I was really feeling the short right here. It is in the trend line, it is a second entry below EMA. It is according to our rules, and we have to take it. And prices shut down lower. And here is a good trap. Pay attention to this. A lot of people probably get trapped going long here because they're not paying attention that they're going long directly inside of this trend channel line. You're going long inside of this trend channel line. You have to let this correction play out. You cannot sneak in early. You cannot jump the gun. Yes, they're looking at this bigger trend line, but we have an overshoot here, and bigger overshoot means the stronger the trend in opposite direction will be. So don't get trapped here. You will need to let this correction play out, and with the overshoot, you always want to err on the side of shorts more. You just don't want to pick lows, because the shorts are now more probability setups. So once you make this pullback first entry, pullback second entry short in a downtrend like this, you have to take this short. It is off the trend line and below EMA. EMA is now pointing down. Later on, prices consolidated here a little bit. This is just mass. This is a congestion. Stay away from this. And the way we trade congestion is we fade the breakouts. Breakout failed to the low side and failed to the high side. And once we make this trend line break and a new high, still waiting for a new low of this trend line, I think this is a good trade to take. EMA is still kind of holding. We got enough first cup, and now you have a new low. Now at this point we can finally be looking for a new high of this two-tier channel working higher. Now it's too early to go long right here. This is just the first entry long from this high, so I still think you need to wait at this point. You don't just want to, because you never know, it may chop just a little bit. Just because we made a new low doesn't mean you might not get a few more chops, you know, a few more, you know, consolidated segments. So just wait, be patient. The proper setup will be there. And true to its form, the price action wasn't a let down. You can see a new high right here, pullback first entry and a pullback second entry. This is a two-legged pullback. Notice this nice reversal bar. Prices traded lower first below this bullish bar, and then instantly in one bar rallied up higher and created this nice bullish reversal bar. This is an awesome setup. You want to see this buying momentum at the very end of the bar, very end to the close, and it is a second entry. You have a break and a new low of this little correction working lower. So this correction played out. Okay, first part of our rules is done. It is a second entry. Okay, another part of our rule is done, and it's a nice reversal bar of the EMA. EMA is holding, so multiple, you know, rules are met. So I think this is a very good trade. You have a pullback right here, but this is a horrible signal bar. You have to skip this. Prices made a new high, just like you would expect after break of a trend line. Prices spiked lower, and then kind of starting to get the range-like vibes. And you can see that the lows right here are forming some sort of geometrical pattern. And once you bounce right here and you get confirmed right here, this is where you want to draw this trend line, because this trend line is now holding right here. So the next bounce, this was the third bounce and the fourth bounce right here. The only reason why I didn't mark any setups is because my signal bars are horrible. If you had just a little bit better signal bars, more bullish, these are horrible bearish signal bars. I cannot take these trades even though it's off the trend line. I cannot, you know, I have to stick to my rules. I cannot take these horrible looking signal bars. It was a little bit, you know, sad. I was really tempted to take these longs because you can see we are creeping up higher each time. EMA is holding more and more, trendline is holding more and more. But, you know, I have to follow the rules. These are horrible signal bars, you know. Even if I close both my eyes, there's no argument for me taking these longs. So I have to sit on the sidelines. If you have a better signal bar, you can take longs here. After this bounce, from this bounce confirmed the trend line right here. Not confirmed, it set it the trend line, and this bounce confirmed it. So if you have a good bar here, here and here, you can take a few longs right here. And price is consolidated near this resistance, and you can see the resistance is forming. Always, you want to always find the key levels. Even this is not the major key level, because major key level is this higher. Is this major key level where prices are reacting to? This is the major key level. But there are even smaller ones, like here. You can see the double top here, triple top here. We broke higher, instantly snapped back into the range, and we broke higher again, created another double top and snapped back once again. This is the trade that I like. This is a lower high from this point, from this double bottom, from this double top. This is the lower high, and this is the proper entry. It's inside of the resistance, and this is the proper entry. This is higher probability setups. Picking these tops is a good argument too. You can take these tops too. But if you just wait for these lower highs, when the market pull back and gave you another chance, this nice bearish reversal bar, this is much higher probability setup. This is, you will have much more winners and much fewer losers if you just wait for lower highs right here. And then prices, you know, scalped out quickly down. And this is all we care about. All we care about, even though the, you know, daily momentum is very bullish, all we just care about is getting our 2 points, 2.5 points as a scalp. If you get a runner, that's a gravy. So we don't really care about that much what the momentum is. We can, you know, use it to gauge our, you know, boss, but our main goal is to get successful scalps, whether the market is trading higher or trading lower. But just remember, this is just a little bit slanted trading range. This is not a proper downtrend. Prices are swinging up and down, and yeah, this is just a trading range. So these two lows are far away from EMA, very high probability setups, but definitely not for beginners to take. This is very overdone, very oversold, and we broke below this support. But overall, volatility has slowed down a lot. It's kind of shame. I like when the market is getting a little bit faster, because you may catch much more runners, and also it's not that boring. You know, I don't like these choppy congestions. Even though I've got a lot to work, you know, during trading, so I'm not, you know, bored. But still, I'm a trader and I like to trade a lot, so I like the higher volatility. Also, when you miss a trade in a higher volatility market, you know that there is going to be another trade, you know, just around the corner. But if you miss a trade in this market, when it's not the volatile, I mean, this is still not bad, but when the market is really slow and you miss a trade, you might wait another hour before the prices get to our key entry point. So this is why I like the higher volatility much more. So it's gonna wrap it up for the day. Hopefully you guys, you know, had a great trading week, and hopefully this video was a little helpful to you, and have a safe weekend. Bye guys.